let's set the stage a bit. So, Nigeria is one of, if not Africa's biggest stablecoin market. We've processed nearly $22 billion in transactions in a single year. And even the IMF right now calls stablecoins a meaningful cross border payments channel because you get to settle your FX in minutes instead of days at about 50 to 70% less than Swift on corridors Nigerian businesses typically use. If you've ever used Swift or if you've ever tried to settle FX, you're probably very familiar with the delays and all of the paperwork and everything that comes with settling FX. But with processing this much transactions, it's clear that businesses have already voted with their money that stablecoins are viable for FX. But what does it actually take to make on-chain Naira settlement work efficiently? And how do fintechs use that to get their on-chain Naira liquidity without having to go through the process of pre-funding? So that's a quick summary of what we're going to be talking about today, in addition to other things. So, Sean, I'll start with you. Could you explain HyperFX, what HyperFX does, what it is, and what does it do, and for who? In, let's say, assume somebody has never heard of HyperFX in their life ever.
Yeah, thank you. So HyperFX essentially is an on-chain FX desk. And I think most people are more familiar with traditional FX desks. For instance, maybe you are at the airport, you're about to take a flight, or you're just, you know, uh, leaving the plane and you're about to go into the new city you just landed in. You would typically then, patronize an FX desk to convert whatever liquidity you had. Could be naira, could be dollars to the local currency. And so this is, your typical like physical FX desk. But HyperFX exists entirely on chain. It only deals in stable coins on chain. I know stable coins used to typically mean US dollar denominated stable coins, but now with a lot of local non-USD stable coins coming on chain, stable coins actually just mean tokenized currency, tokenized fiat currency denominated in any currency denomination rather. And yeah, HyperFX essentially is an on-chain venue that aggregates liquidity providers across these different stablecoin pairs and makes it available to people who need, FX liquidity. One of the differences I would say, and kind of why we chose to build HyperFX is because we saw that all of the existing ways in which people could access FX on chain were pretty limited, right? So, I mean, we can start with the typical Uniswap AMM pool. If you wanted to access a lot of liquidity on a Uniswap AMM pool, this would be very difficult, right? Because first off, Uniswap pools have something called slippage. So when you swap on a pool, if there's just not a lot of liquidity on the pool, then you end up with less. The value that you end up with is actually less than what you initially put in because the price degrades very rapidly when there's not a lot of liquidity for your swaps. Uniswap pools also suffer from NEV, and this has kind of been the most damning problems with AMMs in general. And I don't think there's anyone that has solved this issue quite cleanly. Imagine trying to do a swap and then block builders and MEV bots are eating the value of your swap. This is simply unacceptable for institutional adoption for on-chain FX, right? And I would say the final problem that we saw with AMMs was that AMMs are pretty restricted, right? They are bound to the chain that they are deployed on, so they can only access liquidity on that chain. But the reality is that in today's world, no one is a chain maxi. Businesses cannot enforce a single chain on their customers, and they usually do not, right? They support a wide plethora of chains, and they allow their customers do business across these different networks. And so we needed a way. to have this reconciliation between this multi-chain environment and an FX desk that could service this multi-chain environment. And it just so happened that, of course, we had already built Hyperbridge, which is this reconciliation layer. And then HyperFX is just a natural application on top of this infrastructure that can then, process, multi-chain swaps to liquidity, so liquidity that is provided by our independent LPs, right? And HyperFX has been live, for the past two weeks now, and in such a short time with very minimal promotion and marketing, it's already processed $75,000 in swaps, and you have to understand that like I don't know who's actually doing these swaps, to be honest with you. Of course, we're seeing now lots of teams reaching out to us when they encounter issues and they say, well, they're trying to do something and they've actually been using it this whole time. These are the kinds of like reasons why we build on the blockchain, is because these are permissionless systems, and that's why I think FX has to go on the blockchain, is because it's a common good that everyone needs, and being able to access it in a neutral layer, in a neutral place, is it's the ultimate scalability, right? It's the ultimate. I want to say this is where it has the ultimate network effect, right? And so, yeah, that's pretty much HyperFX. That's what it does, and I will be very happy to go into how exactly it works, in the course of the conversation.
All right, thank you. That covers a lot of what HyperFX does. Okay, so I think something that is also a major problem with fintechs trying to get liquidity is pre-funding or float. So float is essentially the money. If you're running a fintech, remittance payments, dealing with FX, whatever it is, you have to park your money in accounts ahead of time just to be ready to pay people out. So if you're selling Naira, you need Naira sitting there before the customer shows up, you just need to pre-fund this. So most fintech operators know this. So seeing as on-chain, before we get into how on-chain liquidity solves that, hi Charles. Convexity works with a lot of fintech operators, and in your work with working with stablecoins and both from stablecoin as a service to CNGN, you've probably worked with a lot of fintech operators and you're very familiar with the float problem. But could you walk us through how the float problem affects fintech operations day to day, week to week, month to month, or even as a whole?
Okay, thank you, Jojo. So we've seen instances where a fintech wants to do let's say $1 million, and they want to convert from naira to USDC or USDT, and they don't have that much liquidity at or float at that point in time. They can't do such a trade, and that's because of the present architecture we have when it comes to cross-border payments, right? You need to have the funds locked up somewhere, or you need to have that fund in order for you to be able to even do the conversion or do the swapping. And in order for you to have that fund, you need to probably get it from your users, okay, or get it from your customers. Um, my own experience with this was when I tried even making a payment. It's actually a large sum, and the fintech, they kind of like collected the fund from me, but then there was a big delay in the remittance, right? Trying to remit the fund to the recipient where it's supposed to go outside Nigeria, actually. And later on, I found out that they were actually sourcing for um, the counterparty that will help them to make the payment over there, that has that enough liquidity to do such. And this is as a result of the system they presently operate, right? With the use of stablecoin, what we are seeing now from fintechs that are using CNGN presently is you can easily have a central point where individuals or fintechs come and they are still able to control the funds that they have. It could even be via a non-custodial wallet, and the liquidity will be available for anybody to tap in. You don't need to start going to WhatsApp platforms, so you don't need to start going to Telegram or OTC groups to start sourcing for such liquidity in order for you to do such payment or such cross-border transaction. So on-chain platforms like HyperFX, with it makes it easier for you to tap into liquidity from any liquidity provider, right? And then your funds are not stuck, your funds are not trapped, and you don't necessarily need to start worrying about the counterparty or if there is that enough liquidity on the platform, because you can actually see that yes, there is liquidity on this platform, and then my trade will actually go. So yes, for now, what we are seeing are people seeing the advantage of on-chain FX uh, or using stablecoin to do cross-border transaction or cross-border payment, or even manage their um, their treasury and also manage cross-border payments.
Okay, so essentially, what this does is it saves you time. It also sort of helps you develop trust with whether you're a business to business or business to customer, because it probably reduces the time in between the settlements to your customers, because you're going on chain, you're getting your liquidity, you're getting it immediately. You don't have to think about like sourcing from multiple sources, from WhatsApp to Telegram to that one guy that you probably did business with some years ago. So it consolidates everything in one marketplace. Okay.
100%.
All right. So I think I'll still stick with me a bit, Charles. So in conversations I've had with people in the crypto space, there's been a running conversation that every crypto exchange is running a version of an FX deck they never meant to build. So crypto exchanges and fintechs are probably, I would say, cousins. I wouldn't call them siblings. I'll take cousins. But does that problem of a crypto exchange running a version of an FX dex it didn't intend to ever build, is there some truth to that conversation or that line of thought? And does it extend to fintechs as well?
Okay. So from records that I've been privy to, crypto exchanges are uh, the most of their activities or transactions actually comes from just a few percent of their users, right? So you have the um, high liquid traders there that are like maybe 10% or even less than 10% doing trades there. So platforms are now even switching from retail trading to even doing cross-border, right? I remember there was this platform. I don't want to give advice actually. They recently stopped their retail trading to focus on cross-border. Um, I think two platforms that I know of, right? And this is happening as because they are already seeing where the needs are, right, and where they can actually spend um, lesser resource and still be able to um, earn more, right, in that transaction. Could be via their spread, right, spread and all that, as compared to the original business model they had, which is just to do trading, right, for to enable people to buy crypto and also to sell crypto to them. So yes, you are right. The shift is already happening. Crypto exchanges are now doing much more than just digital assets and trading, right? They are also facilitating um, cross-border payments, right, or FX trading. And that is as a result of the advantage, especially using stablecoins, right? And that's as a result of where or what stablecoin has actually become, right? It has gone from just hedging against um, hedging against the volatility with digital assets, right? Bitcoins and all that. And it has now been transformed to a cross-border payment system where you can easily use it, and it is more efficient. It is less costly to do and to use. And also for fintechs, not just fintechs actually. Here in Abuja, we there's a place called Zone 4. Zone 4 is like a popular place where they do forex trading. You buy and sell dollar and other currencies there. And we are seeing these traders now migrating to USDT, USDC as well. So they are now living, although it's going to take a while for this effect to really be felt um, with the clampdown of BDCs by the regulators and all that. And you now have a technology or a system that makes it easier for people to be able to trade or to do FX trade without needing a license. The shift is already happening, right? Fintechs they don't need an IMTO license, right, for them to be able to do that efficiently. Uh, and crypto exchanges that are already dealing with digital asset exchange are also trading to make use of stablecoin for um, cross-border transactions as well. So yes, that shift is happening. People are already trading it. People are moving funds using stablecoin and doing their FX. So it's just easier for everybody to do.
All right, thank you, Charles. I agree that it's easy. I think one of my favorite features about stablecoins is its efficiency. So if you've ever tried to move money, I think I remember before stablecoins became as pervasive as it is now, the process of trying to move USD, it would be you'd have to properly plan this, or you're going to get stuck somewhere and you'd have to start the process all over again. So I love what stable coins have become. All right, Sharon, back to you. So let's say a fintech or a payment business, neobank, remittance, whatever it is that's dealing with FX. So let's say they plug into HyperFX instead of building their own FX layer. What does that do for them in practical terms?
So I think we need to understand just a little bit how fintechs currently operate today. So if anyone is running a fintech, first off, you have to start out as your own liquidity provider, right? This is what we call the float, because um, you typically don't want to hang your entire business on someone else promising you liquidity that, oh, no, don't worry, whenever I need liquidity, I'm going to give it to you. This typically doesn't really scale because at points where they don't actually have liquidity, then your business kind of suffers, right? So we see fintech start out with their own floats, and then they basically provide the liquidity with this floats for their users. And just like Charles said, when users then start to demand even more liquidity than they are actively holding and managing, then this immediately becomes a problem, right? And so there are two layers in which HyperFX can come here. I would say the first layer is just being a replacement for your typical OTC desk. So in times when apps and encounter liquidity crunches where they have to fulfill an order that is too large, as larger than their existing floats, they turn to the alternative FX markets, right? They go onto WhatsApp and they query all the OTC guys that they know. Hey, I need to do this transaction. Can you help me out with this? And this takes potentially days. But remember, this is a very large volume, probably 100, 200K and above, right? Could be in the millions. And essentially, you're trying to find the best rate. Okay, let's say you found the best rate. It took you some time to do that, but you found the best rate. Now you have to execute the trade. Now there's counterparty risk. Can you really trust that the other guy is going to give you the dollars or the naira that you're asking for after you send them the money? All of this stuff is very, very It's very risky, is what I would say. And this is basically where HyperFX can come in as an on-chain FX desk. So rather than the manual process of reaching out to all the different OTC desks, you would just come to HyperFX directly. You would place your order, and a liquidity provider would instantly fulfill this for you. Now we've compressed your FX sourcing from days to really just a few seconds, right? And this is, I would say, the first layer in which fintechs can already start to, get the benefits of HyperFX. And then there's a much higher layer, which is where HyperFX becomes natively integrated into their backend systems. So rather than having to manage your own float and manage your own liquidity, which very, very quickly becomes insufficient, right, for your customers, you wouldn't even have to have your own liquidity. You would just plug straight into HyperFX, and user orders get immediately routed to HyperFX, and it gets settled on chain. And whatever wallet system you're using for to custody your users' funds, whether that's like, I don't know, Fireblocks, whether that's Turnkey, you know whatever it is, you could basically execute those transactions on chain with your users' custodial wallets. They get the, well, in this case, CNGN, or they get the USDC, USDT, and that swap happens basically instantly, right? So these are the two ways in which I see fintechs, working with HyperFX, and these are the ways I think HyperFX would make their lives so much more easier.
Okay, so you've answered this question a bit, but let's say I already have P2P and USDT sourcing in the flow, or USDC sourcing in the flow that works for me. Like I already know, okay, this is who I meet, this is who I meet. And I have, a fair bit of trust in these people. What is, why should I switch to HyperFX if I already have something that's working for me?
I mean, I would say HyperFX definitely compresses the time required to execute these swaps. And
Mhm.
HyperFX is a 24/7 desk. I mean, imagine calling your OTC guy in the middle of 2 a.m. in the middle of the night that you want to execute a swap, right? I mean, I don't know how dedicated OTC guys are to the craft, but I don't think you could do that, right? So you get access to a 24/7 FX desk that's always online, and there's also, like I said, the elimination of counterparty risk. For sure, like you can say you trust these guys. Maybe they always eventually deliver, but the time component is variable. HyperFX settles trades in less than 30 seconds, right? This is guaranteed. And if your trade doesn't go through, because it's fully on chain, because it's mediated by smart contracts, at the worst case, you get your money back. That is the worst that could happen. But of course, in the worst case with the P2P guys is that they delay your trades, indefinitely, and you have no sort of insight into how long it's going to take to execute that trade. And so these are the two different paradigms that I would say exist right now for fintechs. Either you are working with OTC guys, and there's this variable time component, there's this counterparty risk that exists, or you just say goodbye to all these problems, and HyperFX settles your trades instantly or just gives you your money back if it cannot.
Yeah, all right. I think the worst case is you get your money back is a pretty strong, not guarantee, but it's a pretty strong thinker, because typically the worst case is you lose your money and you lose the trade and you have to start from scratch. Okay, so Charles, let's talk a bit about CNGN. So when people hear CNGN, they either think Inara, or what is CNGN, or what's going on. So could you clear this up for the people? Is CNGN just Naira in digital form or something else, or what exactly is it?
All right, okay. So we get this a lot, right? Especially from those that are not crypto native, and for those that have been following the space for quite a while, and what gave birth to CBDC, right? So CNGN is a stable coin, right? And for you to understand what or how stablecoin came to be, you need to take a step back to what necessitated stablecoins. uh, um, in the beginning, hello, can you hear me?
Yeah, I
Hmm.
can hear you. We can hear
Yeah.
you,
So,
yes.
so in the beginning, right, during the bull run of cryptocurrency, most especially Bitcoin and all that, the volatility was quite high. Say, for example, you bought Bitcoin at $20, and then within the next couple of hour or even minutes, it has dropped to um, $15, right? Now, such kind of volatility doesn't really make Bitcoin to be spendable or be used as a form of money for payment, right? That is one. Then number two, for those that are actually using it as a store of value, you find out that the value keeps shifting, it keeps moving rapidly. And if you are planning to say you want to buy a car, you want to buy a house, or you want to buy an asset with such um, uh, um, digital assets, right, like Bitcoin, you before making that payment with Bitcoin, the value will likely drop, or even after making the payment with that such digital asset, the receiver or the seller would have less of a value, right? And if it is something that has to do with probably production, you are producing and you want to go back to the market to refill your stock and you're receiving funds in Bitcoin, the value that you get from that Bitcoin when you go back to the market will likely drop. So that's kind of like necessitated the bet of stablecoin with USDT and some other algorithmic stablecoin. Now, that is a different history when you compare it to a CBDC. A CBDC like the Naira, right? And a CBDC so aim is to have a digital version of a country's sovereign currency, like the naira. So the naira and the e-naira are the same, and they are coming from the government. They are coming from the CBN, right? They are the ones that authorize the creation of such um, um, currency. Now, the difference between these two is that a CBDC is sitting in a closed loop. A closed loop in the sense that it's sitting on a ledger that is controlled and managed by the central bank. Take, for example, the one that was deployed by CBN, which is the INR. It sits on Hyperledger Fabrics, right? And Hyperledger Fabrics is a controlled or private uh, chain that you don't have access to the Explorer, right? You don't have access to the Explorer. You cannot see the transactions happening, right? You For you to engage in such a system, you need to be granted access. If you're a bank, then probably you'll be running your own node, but it's the CBN that will give you such permission to join the network, to be a validator and all that. Now, that is different from a stablecoin that runs on a public blockchain, right? Now, the beauty of a public blockchain is that you can do much more with it. You can create you can create a stablecoin that can be used for on-chain FX. You can create a stablecoin that can be used for tokenized security, right? Investing in tokenized assets like MMF, money market funds, or a tokenized stock and all that, right? So you can do a whole lot with it. And that difference is what we already see, right? If you look at the market cap, or if you look at the liquidity, or look at the transaction happening with a stablecoin, it has shown the potential of a stablecoin and how successful that project has been compared to um, CBDCs that are currently still being experimented on, right? And then there is still the tweaking, there is still the conversation on how can one CBDC from one country connect to another CBDC in another country, and all these policies all around how CBDCs are going to work and all that. And even the US government not fully in support of CBDCs, right? So So it's already clear where the world is going. And I think what we are now witnessing from government is how to use the potential in stablecoin for cross-border and also to de-risk the systemic risks that is attached to such stablecoin. One of them, which is the dollarization of an economy, right? I believe governments are really, really keen on how they can handle that. So the difference is that one, the stablecoin is privately issued, for a CBDC is issued by a government of a country. The CBDC, or like in Naira, is your digital version of um, a sovereign currency, like the Naira. While the stablecoin is using such sovereign currency as a backing, right? Somehow it's even tokenizing such currency and then making it available on a public blockchain. And that has lots of possibilities, which is what we are now seeing and is evident all around us.
Yeah, thank you, Charles. That was a very in-depth explanation. So I would say, or we could say that the CNGN is a stable coin like, say, USDT, USDC, but with more compliance and more tailored for for instance, the Nigerian economy, the African economy, and it's purpose built to scale the African economy versus, USDT, USDC. Okay, I
Yeah.
think
Yes.
so. I'm going to read out a bit of so as like some backing as to what CNGN is and how CNGN has performed so far. So as of July 2026, there's 2.4 billion CNGN in circulation. Total traded volume 209 billion, 6,290 6,290 holders of CNGN, and total on-chain transaction count 366,302. There's a saying that says, men lie, women lie, but numbers don't lie. So if you need backing and for what Charles has said about CNGN, I like that it's all on the website. You can check the proof of funds, attestation report, and full on transparency. Okay, so I think let's get into a bit of the details for operators listening. Also, if you have any questions, please add it in the chat and we'll take your questions in between. So, Charles, for the operators listening, what does CNGN do in, let's say, a HyperFX enabled transaction that a regular bank transfer cannot?
Mm. Okay, I think that one should have gone to Sheung, but
Sharon as
let
well.
me
But let me hear from your end as CNGN, and I'll hear from Sharon's end as for HyperFX.
okay. So so for a local stable coin like CNGN, um, number one is the cost, right? The cost of trying to go directly from just NGN to USDT, right? There's a cost attached to on-ramping when you do that. But when you have a version of the Naira that is sitting on chain, the cost drops significantly. That is one. Then number two, it is quite easier for you to have a trading pair that's between the CNGN and USDT or CNGN and USDC. Platforms like HyperFX has already shown that, right? And that goes to tell you that if you want to exchange or if you want to convert from naira to dollar, you can do that digitally. And by doing that digitally, the CNGN facilitates that. You can have your CNGN on your wallet. You can have it like most fintechs we know now that are doing cross-border. They already have wallets integrated into their legacy systems, right? They have wallets that can enable you to receive USDT, USDC. and you can also receive the CNGN. So imagine that you are holding the CNGN and you want to get dollar, right? You can easily go to HyperFX and then you do the swap, or you go to any on-chain system that is already out there and you easily do the swap to USDC or USDT and send to whoever you need to send, right? You don't have to start doing, okay, you go to your bank and then you start funding and doing all those stuff, right? So it's easier, it's seamless, right? It makes life easy. And we are also seeing use cases of people integrating CNGN on cards, right? So our own role in this whole play is to create the infrastructure, which we've done, that can enable people or builders to create solution on top of it, right? We're seeing solutions on the card. Right now, there's a platform where you get a card and you're able to spend your CNGN right on the card. You just go to any store that accepts POS or any ATM, you slot in your card, and then you can get Naira, right? So utilities are already being created around the stablecoin. We are still young and we are still pushing to see that people understand, or creators or builders understand that um, we've built an infra for Naira to be used on chain, and the possibility is quite endless.
All right, thank you, Charles. And Sharon, on your end from HyperFX.
So my perspective is actually going to be on the programmability of stablecoins. One of the biggest issues with OTC desks, with P2P platforms, has always been that there's always this intermediate state where you can have one counterparty receive the assets, but they don't necessarily give you what you asked for, right? So maybe in the context of, let's say, P2P, you wanted to do a trade with a merchant and you had sent them the Naira, and you're just kind of now waiting for them to send you the dollars, right? This is primarily because the Naira in your bank, it's not programmable, right? You can't say, okay, these are the conditions in which these money can be spent. So this is why I've always been very vocal about stablecoins and kind of what they represent, even just beyond their obvious financial use cases, which is, for today, cross-border settlement and the like. But even for their future use cases that are yet to be built, right? Now, because of um, Naira is on chain and it's programmable, HyperFX doesn't have this intermediate state, right? It doesn't have this intermediate state where the money has been released to the LP, but they have not yet released, the other side of the asset that you're asking for. And this is essentially because of programmability. HyperFX has been programmed in such a way that if someone wants to fulfill your order, then they have to essentially provide exactly or more what you're asking for, and in that same transaction, then they get the assets that have been escrowed for the order. So this is the difference, I would say, between HyperFX and your traditional OTC and P2P platforms. And this is essentially why we chose to partner with CNGN to make this a reality, right? Programmability, in my opinion, is going to open up a wide variety of applications in the future, even beyond HyperFX. And of course, my hope is that HyperFX becomes composable with these applications as they come up in the future. There are tons of ideas around programmable Naira, and essentially, having some conditions be met before Naira can be spent. This is not something that you can do with your traditional like banking APIs. And even if you could do this, it's not going to be composable very easily with other applications, right, that also leverage banking APIs. But on the blockchain, where everything is in one giant state machine, it's in one giant state, the composability and the programmability is just amplified to like exponential levels. So this is why we decided to use CNGN with HyperFX. And we're already seeing the benefits, like I said, right? People are already swapping. And like I said, if your swaps don't go through, then the system is programmed to give you your money back, right? It's not a human being that can say, well, I'm just going to keep this for myself. It's a simple program on the blockchain. Its job is to facilitate swaps. And if the swaps don't happen, it's going to make your funds available to you. And if you go on the HyperFX website today, and you kind of see our history of trades, you will see that some trades were sort of reverted, right? They were refunded, right? So that's because for some reason the LP didn't want to fulfill those trades. Well, the user just got their funds back, right? And in this case, no one was left in this intermediate state that you would typically find, in OTC and P2P platforms.
Okay, so while I still have you, a key advantage of HyperFX, this is related to infrastructure and programmability and everything. A key advantage of HyperFX is atomic settlement. And when I hear atomic and settlement, what enters my mind is what if Oppenheimer was a crypto trader? But moving on. So what does atomic settlement mean in simple terms for businesses who want to go on chain and use on chain FX?
So atomic settlements is exactly what I just described, but I will try to break it down and kind of where it came from. So in database systems, um, when you wanted to execute a series of database writes, for the technical people in the crowd, um, you typically want a situation where either all of these writes execute or they are all reverted. So in database programming, this is called an atomic transaction. It's a transaction which executes, in full or everything is reverted. And this is, for people who work on backend systems, work with MySQL and the like. So this is kind of what this is where the word atomic transactions come from. But, in the context of of HyperFX and of a crypto swap, essentially what we're saying is that like it's either that the swap executes, right? So both the liquidity provider receives the escrowed assets and the user receives, the other side of the trade that they wanted to execute, or everything is basically reverted back to the initial state. And the initial state is where the user, originally had their money, right? Because in the beginning, they had their money, they wanted to do a transaction. And then because of this atomicity, this atomic guarantee, it's guaranteed that they will either get the funds from the liquidity provider, and of course, the liquidity provider will get their funds, or everything gets reverted, and essentially the user ends up back being with their funds.
All right, I think that simplifies it fair enough. Okay, so I have a question here. Someone's asked, so can HyperFX actually handle volume? So both HyperFX and CNGN, what's the guarantee of adequate liquidity? So Shona, you answer this first, and Charles would answer for CNGN.
Yeah, so I mean, right now, if you go on HyperFX, you can see that we've already crossed over $1 million in liquidity, and this is just 2 weeks since launch, right? So, I think for how young and how young the protocol is and how much liquidity it's already accumulated, I think it's doing really, really well for itself. And I think it speaks to the future growth that is possible as we allow the protocol continue to mature and we allow more and more people to get used to it, and to understand it and come to trust it. So I think that really the liquidity ceiling or the volume ceiling for HyperFX is just how much liquidity has been committed to the protocol by liquidity providers, and we're working with lots of OTC desks and BDCs and even institutional liquidity providers to onboard them into HyperFX. And yeah, I think we'll definitely see more news in the coming weeks. Um, on the CNGN side, look, I think of course, I'll let Charles come in here, but I think CNGN is also well poised to handle, CNGN to NGN liquidity, right? This is, CNGN is fully backed by Naira, and this is SEC regulated, in fact, and I think now recently CBN regulated, and this is, like I said, this is why we chose to partner with them.
All right, thank you, Sharon. Charles?
Yeah, so what Shemu said is true and very correct and accurate. And just to add a bit to the last question you asked him, with with um, stablecoin, what we call delivery versus payments becomes easy, right? Delivery versus payment is more of like something that needs to be atomic. You give and you receive immediately, right? There is no middleman. There's nobody stopping the flow of such transaction. So, in order for you to guarantee delivery versus payment, a delivery versus payment product, it has to be on chain. And that is why it's easier for you to create such atomic or programmable money or payment system using the blockchain. Now, coming to the CNGN, yes, the CNGN, we're currently in the RE program with the SEC, and also we are also being managed by the CBN as well. It's easier for us to do our on and off ramp. Okay, liquidity is not a problem. The good thing or the beauty about a stablecoin with a CNGN is as funds come in, as people bring in the money, right? You bring in your NGN, you get the CNGN immediately, right? So it's not like it's being pre-minted. We don't pre-mint CNGN. It's based on the demand that CNGN goes into circulation. And then for the off ramp, the same thing happens. So all this has already been provisioned. Even we'll be releasing another product, right? Uh, it's from a sister company actually, that will even allow traders to be able to take loan using their digital assets like stablecoin. Right? So you get the fiat equivalent, but this is coming up quite soon. So yes, we've seen the needs in the market, and we are encouraging others to create solutions around this and make it possible for people to come on chain and do their trades.
All right. You just dropped a little teaser. I'll be looking out for that. And if I have this correctly, the CNGN is probably going to expand into a suite of financial tools. So we already have stable coins and now we have loans coming as well. Okay. We'll be wrapping up very soon. So Sharon, back to you. Let's say with everything, I'm a fintech operator, and after listening to both you and Charles, I'm sold on the combination of HyperFX and CNGN for my FX needs. So, what are the steps I need to take from this first conversation I'm listening into to my first live transaction?
Yeah, like using HyperFX is very, very easy. And like I said, we've already processed, almost $25,000 in transaction volume with a very, very modest launch. It's as easy as going to app.hyperfx.finance. You connect your wallet if you have a non-custodial wallet. And if you don't, you can use Privy, which allows you to create a wallet using your Google accounts, right? And yeah, you fund your wallet and you're able to immediately do a swap from USDT, USDC to CNGN on Base. And you can do the swap from anywhere. You can do a swap from Polygon, you can do a swap from Arbitrum, BNB chain, Ethereum, even Base itself as well. So, HyperFX, like I said, is a cross chain. It's a FX desk that spans the entire multi-chain and allows people to bring their stable coins from wherever and swap directly into CNGN on Base. So if you can easily do a swap, you can do a cross-chain swap and see how easy it is. You can see how LPs essentially bid for your order, and you can see how fast the swaps execute, right? If there's any trouble with using our protocol, please reach out to us. We are on Twitter. You can reach out to us on DMs if you encounter any issues, but I doubt that you will anyways. But please feel free to reach out to us in the DMs, and we can definitely help out with your SDK integrations and consulting your engineering team to integrate directly into your backend. Because I really believe that the sort of end point is that HyperFX will sort of grow beyond its user interface, right? Its user interface is not going to be where most of the orders are coming from. It's going to be from the integrations, into your backend systems, so that it's sourcing liquidity directly for your customers, and you essentially can then put your floats that you'd have used to manage liquidity for your customers to much better use, right? You can probably deploy it into yield bearing positions, or you can now spend more of it on marketing, right? So these are the kinds of things that I would expect to see in the future, making fintech operations much more capital efficient. But yeah, that's pretty much it.
All right.
Can I also quickly add that I don't know if Sean has mentioned that that you can also be part of the liquidity providers in HyperFX by running your own simplex, or can Sean speak more to that?
Oh, for
If you
sure, for sure. I mean, if you also are in a possession of excess liquidity, then yeah, we're onboarding liquidity providers. Please definitely reach out to us through DMs or through our mail ops at polytube.technology. Becoming a liquidity provider is as easy as just running a piece of software, and you just give it a wallet system that it can use to sign transactions. So, liquidity providers are fully self-custodial. You're not depositing funds into our smart contracts. The funds stay in your wallet. The only thing that you do is when this software, which we call Simplex, observes an order on chain, it will try to sign the transaction, which can be used to fill the order. Now, if your fill transaction is profitable enough for the user, then it gets selected and the fill gets executed, and you immediately receive, as you're giving out the funds, you're immediately receiving the escrowed assets. And one of the cool things about Simplex is you can also optionally deploy your funds into what are yield bearing vaults. So for USD denominated stable coins, you can deploy your funds into Aave protocols like Aave, which pay around 3 to 4% on your deposits. This is very competitive with U.S. banking, fixed interest or treasury bond rates. And if you're holding a lot of naira and you convert that to CNGN so you can provide liquidity, we also have a vault that has incentives of up to 7%. So you can really start earning 7% annually on your CNGN holdings on chain, providing liquidity to HyperFX. We're essentially able to compose multiple income sources for LPs, just so that your LPs are always online and available to process orders. So if you have any questions, please do definitely reach out in DMs, and we're happy to help you get onboarded.
All right. Thank you so much, Sharon. Thank you so much, Charles. This has been insightful. So we're going to round this up with a rapid fire session. Predictions are all the rave right now. So also, if you have any questions, please leave them in the comments. If you rather not, you can just reach out to DM HyperFX, DM CMGN, DM Hyperbridge. Reach out and we'll get back to you on whatever questions you have on boarding, whether as a liquidity provider or whether as a business that wants FX. So, rapid fire prediction. So, for this particular one, I'm a bit iffy on this, but hey. So, Charles, starting with you, what is your prediction for Naira to dollar rate by December? For context, Naira is currently about 1,391 Naira. What's your prediction by December?
Am I earning in dollars? If I'm earning in dollars, I hope that yes. Um, my prediction is that uh, probably 1-1,
1,100.
like yeah, 1,100,
Uh,
depending if no, we are approaching election year. We are approaching it will likely go to 1.5. It will likely go to 1.5.
so 1-1 or 1-5. If all things work out, 1-1. If Nigeria's 1-5.
Yes, Nigeria 1.5.
Okay. Sharon, how about you?
To be honest with you, I'm on the side of Charles, but not on his optimistic side, more on his pessimistic side. I think we might see 1.5, 1.6, and that's just based off of the geopolitical environment that we're in right now. Oil prices are going up, inflation is going up. It's not looking good. I think Dangote is now starting to swell in dollars, so that's absolutely cooked for
Yeah.
everybody.
Yeah. Okay, so what's the next African currency after the naira to go fully on chain? I know some have, but what's the next African currency you want to see go fully on chain, Charles?
So even currently we have the rand,
Yeah.
the South African currency on chain.
Mm-hmm.
ISA is kind of like the biggest
Mm-hmm.
in South Africa. We have ZAP and others. I think we have like six,
Mm-hmm.
but the one that is kind of doing very well is ISA.
Mm-hmm.
So and it's not fully a stable coin,
Mm-hmm.
right? It's like tied towards money market funds and others. So yeah, so we've seen that. The next that I'll likely predict will come on chain and do well. We already know about Tanzanian shilling,
Yeah.
NTC this year that is there. Hopefully, it picks up and does well. And I think the next will either be Kenya or Ghana.
Oh, okay. I'm going to put my money on Kenya. I think I'm going to put my money on Kenya. Okay. Sharon, let's say stablecoins they have overtaken bank transfers for Nigerian cross-border volume. How many years do you think it would take for that to happen?
I think first off, they've already happened because everything's kind of on that G. Nobody's really releasing their real numbers before, SEC and CBN, forms a task force on their head. But look, when these numbers start to become public, I think we can start to see people publicize their numbers, in the next 2 years for sure, especially because of the recent digital asset policy just recently signed by the president. So a lot of people can start commenting the lights to say they want to be regulated. That
Mm-hmm.
will take some time. But yeah, I think in 2 years' time, we should see that these numbers have already overtaking your traditional financial reels, because like I said, most of the FX that's happening right now in Nigeria is sourced on the blockchain, right? You saw the Chainalysis report, around
Yeah.
22 to 90 billion dollars, in blockchain transaction volume can be attributed to sub-Saharan West Africa, and of course Nigeria is the largest country in West Africa.
Mm-hmm.
So that's kind of my position.
Okay. All right. Final prediction for Charles. So we have sectors in fintech businesses, payment, and so I'm going to split them into three. So remittances, import exports, and exchanges. Out of these three, which do you think would be the first sector to move at least 90% on chain?
Um, Actually, we have one that has moved on chain probably 80 to 90%, and that is um it's not remittance, it's sorry, is it
Import,
remittance?
remittances, import, exports, or exchanges.
Import export actually, right? But
Mm-hmm.
it's more of import than export, right? They use stablecoin for, right? Yes. So probably remittance will keep growing,
Mm-hmm.
but import export is what we've seen more, right?
Mm, so
So
Nigeria, China, Korea.
yeah, not the Asian corridor, we've seen that.
Okay.
We're also seeing other corridors opening up. So probably import export, then it
Mm,
moves to exchange, right, to cover for things like school fees and some other
yeah.
stuff, and then probably remittance.
All
I
right.
don't know the figure for remittance and the other one. For import export, I know that.
Okay. All right. Thank you so much, Charles, and thank you so much, Sharon. This